Hey guys, welcome to a new YouTube video. So in this video, we're going to be talking about some things that are very helpful for your trading. I've always admonished people to trade price action and to use price action in all the tradings they're doing. And so I'm going to be dedicating some of my time in teaching price action here on YouTube so that a lot of people can understand it and can actually improve their trading career instead of using indicators that are not good, for trading. So in this particular video, we're going to be looking at some price action techniques and principles, and I believe it's going to be very helpful, so you can watch the video to the end. And other price action videos will be posted from time to time, so follow us and turn on the notification button so that your notification bell, so that you can always receive messages when we post something, and then follow us and subscribe. So the things we're going to be talking about in this YouTube video, the first one is market movements. That's the first thing. And then secondly, we're going to be talking about price patterns. Then third, we're going to be talking about candlesticks. Then how to actually analyze the market, and then I will tell you my strategy in analyzing the market. These are just a few things that I'm going to try as much as possible to cover in this YouTube video, so that you can actually improve your trading career and stop using indicators that blow accounts. Indicators are not really that nice, in contrast to price action that makes trading a little bit, much better, and gives you the confidence you actually want when trading. I've talked a lot about price action in my other YouTube videos, so you can watch them and understand why I so much love price action, and I so much prefer that people begin to use price action for their daily trading career. So the first part, which is price, which is market movement, I'm going to do it in such a way that you understand fully. I'm going to show you pictures on the chart. I'm going to analyze the chart, do a lot of things to make sure that you fully understand the concept of price action and how you can actually use price action to make money, to actually trade, not to make money while trading, all the same thing. So the first thing which we're going to be looking at now, which is the market movement. I've actually said this in my other YouTube video, but let me just make the emphasis because of some people who might not have watched this particular thing I'm about to say in my other YouTube video about market movement. There are three market movements in the market. There's trending market, there is breakout and retest, and there's a ranging market. There's trending, there's breakout and retest, and then there's a ranging market. I'm going to show you what trending market, there's breakout and retest, and then there's a ranging market. So let me show you exactly what I mean. Now, let's assume that this is a forex market, and then the market decides to go like this. I'm still going to show you how it really looks in the chart. I just want to give you the idea. You just have something like this in the market. Remember, okay, in a forex movement, there's always a major resistance and there's a minor resistance. So you can find, the major resistances and the minor resistances in different places. So now let's assume that this is actually how the market moves. This is actually how the market moves. And then you have something like this. Now this market is going uptrend. The market is going uptrend. Why is it going uptrend? This is not the same place it was. That is it. It's increasing at any given time. Is increasing. By the time you take this here, you find out that the market is actually moving. If assuming we had 10 here, we can have 12 here, we can have 14 here, we can have 15 here in the price in the price ranges of the market. You understand that the market is moving, is increasing. So when the market is increasing or decreasing, is known as trending market. So in the trending market, there we have the bearish market, we have the bullish market. The bearish is also called the downtrend. The bullish is also called the uptrend. So that's just how you know in a trend. A trend that is going upward is a bullish market, while the market that is going downwards is a bearish market. Remember that the sole purpose of this video is to make sure you fully understand the concept of price action. Believe me, it's going to help you improve your trading career. I don't know how people learn their own price action, but the way I teach my price action is very, very different, and I believe it's going to help a lot of people in increasing the way they trade. This is not like any other YouTube video. I actually had to force myself to do this. I actually had to seriously force myself to do it. I don't want to talk about it, but seriously, it's going to really help you, and I'd love if you watch to the end because it's very nice. Now, this market movement, I've talked about it in the other videos that I've posted on YouTube, but let's just make emphasis. you know, by still talking about it in this way. Now the picture you see right now is an uptrend, which, like I said earlier, is also called a bullish market, a market that is going up. You can see it's not the same place this was that this is. It's not the same place this was that this is. It's not the same place this was that this is. It's always increasing. Remember that in an uptrend market, always resistances you can see. The market cannot just begin to move up for you. No, you can never have. Although it happens sometimes in DERIV, but it's also very rare. But you can never have something just going up and going up. No, it doesn't just happen like that. Most of the times you'd notice that there are some resistances that you will notice in the market. Some things that will just, you know, resist. The market cannot just go up. Those resistances are what we call higher highs and higher lows for uptrend, and lower highs and lower lows for downtrend. I'll show you. Now this is an uptrend because I want to draw it up in this other means. Now the higher highs and higher lows, this is how it goes, like this. Let's assume that this is how this market goes. Of course, it doesn't really go like this. There are some other, you know, resistances. But when you are using Elliott wave principles, this is how you look at the market when you're using Elliott wave principles. So I'm going to identify higher highs and higher highs with HH and higher lows with HL. So here we have a higher high. Here we have another higher high. Here we have a higher low. Here we have a higher low, and here we have a higher low, and here we have a higher low. This market actually is for uptrend. It's meant to go up. But you can see it goes up and comes down a little bit. It retraces back. It doesn't just go up like that. It's retracing to give some buyers opportunity to actually enter a market, and give some people who actually hold the market to be afraid and be like, this market is coming down. The market cannot just begin to move like that. Sometimes it has this kind of principles. It's mainly used by Elliott wave principles to actually understand it. I think the video is there on YouTube. I think I posted it before. It's a very, very nice strategy, and I'd love, maybe if you it's just that it's very hard to perfect. Even me, I'm still trying to perfect it, but it's very, very nice. Whenever you see it play out, it just plays out very, very nice. So now for an uptrend, you have a higher high, you have a higher low. Why, if it's for a downtrend, let's draw one for a downtrend. If it's for a downtrend, let's just indicate it that as if it's going down, and you're having something like this, it's going down. When you're comparing this and comparing this, the market is going down. Now here is the lower. In downtrend markets, we have, instead of higher highs, you just replace the high with the lows. And so in downtrend, we'll be having lower highs, lower highs, lower highs, lower low, lower low, lower low, and lower low, and then lower high. Sorry for that, lower high. So that's just it. And all those things are just to show you the resistances the market feel, or the market observe whenever it's going. A market cannot just begin to move like that. At some point, to retrace back and then go up. Here, watch. This market is going down. When the market went all the way down, here, okay, normally is meant to go down. So its buying is like a loss for people. So when it bought, a lot of people would have closed the market. Imagine I took this market here. Sorry, let me make it more visible so that you'd understand what I'm talking about. Imagine I took this market here now. Imagine I took this market here. And let's say here is 11.1 in the chart. And then the market buys all the way up to this place. And then here is maybe 10.1. You'd understand that maybe okay, when the market got here, let's assume that here is like 17. I may have up to $1,000 profit. And by the time the market gets here, my profit has already reduced. And that will bring fear and be like, are you sure this market is actually going to still continue the trend? Yes, it will. Yes, it will. That's why it's very nice to use the Elliott wave principle to understand some of the principles of, a market movement like this. So let's not waste much time on this particular one. So this is how the downtrend looks like. You just have a downtrend, it moves like that, and that's the bearish. So I think all these things are just the basics. But I like touching the basics whenever I'm starting a YouTube video, because it's not everyone who actually understands the concept of the basics, and it's just very nice if you just begin like that to introduce the whole stuff so that nobody gets confused along the way. So like I said, that's how the trending market moves. This is now this is an uptrend. This is the one here is the higher high, the 2 is the lower low, is the higher low, higher high, higher low, higher high, higher low, and then here there's a breakout. We are going to talk about the breakout and retest, but here there's a breakout, you know, and stuffs. So like we said, in the forex market, there's trending markets, that's the movement of the market. There's trending markets, there's breakout and retest, and there's ranging markets. So this is about the higher high and the lower and the higher low in a much means where you can understand it, apart from the one we've drawn. So now we're going to go into the ranging market. Ranging market is actually very nice, and I have a lot of friends who use ranging markets to trade. I personally don't make use of it a lot, except recently, but it's very, very nice, and I have my special reasons for not really agreeing to trade with it, but it's actually a very nice this thing. Now let's assume that you have a market that goes up here, comes down, goes up, comes down, goes up, comes down, goes up, comes down. That's just what you mean by range. And what is the strategy that is always used for ranging markets is just support and resistance strategy, where you have that here might be a support or a resistance level, and once it gets here, let's assume that the market was here, and then you actually know that here is a support or resistance level. Once it gets here, you buy, and once it gets here, you sell. That's just it. But now my observation and why I don't usually use trading trend this ranging markets to actually trade is because it's not the same thing you find in the 5 minutes. It's not the same thing you find in the 1 hour in terms of the ranging, because ranging can just a ranging market in a 4 hours time frame may actually be a trending market in a 5 minutes time frame. So it's very, very different. But I have a lot of friends who make money from it. Personally, I don't, and not that I don't use it actually. And it's very, very nice, and I know people who use it to make a lot of money. And then the other one is the breakout and retest. Like I showed you in the other, like I said, I don't really want to waste time talking about these basic principles of the forex trading, but we just have to touch it so as to be able, so that nobody gets confused in the course of the teaching. So, like I said, like I showed in the other picture, I think it was here, yeah, where you see a market breakout, that's a market doesn't want to go the direction it's going again. Let's assume we have something like this, and this market is going up, goes up, comes down, goes up, comes down. Now this market is trending, is an uptrend market. So now assuming this market is going up, and all of a sudden it decides, no, I don't want to go up again, I want to come down. That is breakout. Now instead of coming here and going up the normal way, it just comes here and then breaks out. It's no longer going up again. It breaks out, it has broken out of the trend, out of this trend line. And once it does that, you find out that there's a retest and it comes down. That's why it's called breakout and retest. Why? Because once there's a breakout, there's always a retest, and then the market begins to go at the other direction. It's always very, very nice, and I always love trading this particular one because it's very, very nice when you see it. Market breaks out and then it begins to trend and begins to go the other direction. So if you want to know more about this, just watch the other YouTube video. I don't really want to take much time talking about the basic principles of forex trading now. So now there are things that are called price patterns, and it's very, very popular among traders, just that people don't really know the principles to take. I've seen a lot of videos, a lot of PDFs talking about price patterns, and yet people don't want, or people don't know how it's been done. Now price patterns are very, very nice things in forex. In fact, it has 99.9 efficiency in terms of any other strategy you might see in forex trading. Price pattern has 99.9 efficiency. The only problem price pattern has is that it's very, very difficult and rare to find. But once you find it, believe me, and you take a trade with it, it's very, very nice, and you can make a whole lot of money just trading price patterns. When I started forex trading by 2019, by 2020, I think that was when volatility 25 was recently introduced. Like, I'm not sure, but there was this volatility that was introduced. And I traded this cup and handle price pattern, and I made a lot of money. I made more than 5K because price patterns are very nice. One, because it takes a lot of time to actually achieve. It takes time. It's not something that happens in 5 minutes. It takes time. I think I took that trade for up to 1 week. I traded back to back, and I made a lot of money then, you know, trading the price. But that was one new indices I've forgotten. I think it's V25, I think so. By 219, sorry. That was when it was actually introduced. So price patterns are very nice, and I'm going to be talking about a few of them that you can actually use. Just that it's very, very rare to find, but believe me, when you find it, you can make lots of money using it. So one of them is the head and shoulder. You've seen them. The names are here. There are lots of others. I just brought out these ones because they're the ones that has more. You know, you can actually find these ones around. You know, around. This is we have the head and shoulder. We have the double top, the double bottom, the symmetrical triangle, the cup and handle, the falling wedge, the bullish flag, the descending triangle, asymmetrical triangle, and ascending triangle. The cup and handle is very, very nice. This was the one I used in trading the, I think, V7, V25. I'm not really sure of the volatility it was again, but I believe it's V25. It was just recently introduced that year, you know, and it has just it just did what it did. And I used the cup and handle, and I traded a lot of it, you know, from it, and I traded it for up to a week. It didn't just happen within a space of time. It happened, you know, for a very long time, a week. So I'm going to be showing some of it in this video. I'm going to tell you, you know, how some of them are before we move over to the next, you know, phase of the video. So there'll still be pictures that will show, you know, some of them, but let me just explain some of it, you know, before the next, before I talk about the next thing. Now, for the head and shoulder, why it's called the head and shoulder is because it has two things. There's a head, and there are two shoulders beside it. There's a head, and there are two shoulders beside it. Let me show you what I'm talking about. This is a market now. This is what I'm talking about. There are two shoulders, just like a human being is. You have a head, and there are two shoulders attached to the head. That's why it's called head and shoulder. We call this the head. These are the two shoulders, and this is the neckline of the two shoulders. This is called the neckline of the two shoulders. And once you know, one of the main strategies to trading this head and shoulder is just very, very simple, which some people don't know that, because a head and shoulder, there are very, very large possibilities of having fake head and shoulders. So a lot of people get discouraged, or they don't really know which one is which. One of the main reasons or main confirmations to trading the head and shoulder is you only trade it once it has passed the shoulder level. If the market is still here, you don't trade it, because it has very, very high possibility of buying from here and reaching here. If it won't even reach the shoulder level, it will reach here, come down, and it's still valid. Let me explain what I mean. Sorry for that. Let me explain what I mean. We have this market moving up like this. Now these are the necklines. These are the necklines of the market. Just exactly something like this. You only trade the head and shoulder once there has been a breakout from the neckline. You don't trade it when it's still here, because it still has possibility of moving up all the way up here before coming down. So it's very, very nice, and that's why some people fail using the head and shoulder, because they don't have patience to wait for it to. Because that's the only confirmation that, yeah, that this is actually a head and shoulder. A market can decide to form in this way, in something like this, but that doesn't mean it's a head and shoulder. Let me show you. It has something like this, and then it gets here. It has not reached the neckline, and then it buys. This is not a head and shoulder. It's not a head and shoulder. The head and shoulder must have to cross the neckline, and then, yeah, that will be the confirmation that, yeah, this is a head and shoulder, and you know how, you know, to take it once that happens. So the next one I'm going to talk about is the double top. The double top is also very nice, and very, I think that's the most common one. I've had even amateur traders use it and make a lot of money in trading forex. The double top is just like this. Just have something like this. That's just it. It's just like a V shape. It's called double top because there's one top here and there's one top here, and it's at the top. The double bottom is the inverse of it, where you have this at the bottom. And once you see something like that, people are always up to taking a trade from here, and it gives them a lot of money. Amateur traders, a lot of people use it, although there are lots of irregularities in this, but I think it's the most common price action pattern in the whole price action. This one, you see it a lot of times. Personally, I don't trade it because there are lots of irregular. I trade it sometimes, but irregularities in it that is not really, you know, that nice. Then the next one I'm going to be talking about is the symmetrical triangle. A symmetrical triangle moves something like this. It has a triangular move, and you see a market going up like this, going up like this. Once you see a market going up like this, it's very, very nice. I love the symmetrical triangle. I think when was that? I can't really remember, but there was a time it kept on repeating in V75. That was when I traded V75 a lot. It kept on repeating in a 5 minute time frame, and I always took it, and it's very, very nice. So once you have something ranging like this, it breaks out to either here or to either here, then retests back and begin to sell, and it's going to sell and sell and sell and give you a lot of money. So it's very, very nice to trade this. Whenever, in fact, one of the price patterns I would advise people to always play is the symmetrical triangle. Why? Because I've never seen the symmetrical triangle fail. I've seen the double top fail a lot of times. I've seen the double bottom fail a lot of times. The cup and handle is very rare to find because it takes a lot of time to form. But the symmetrical triangle doesn't take much of the time, and it's very, very accurate, 100% accurate to trade. So I'd advise a lot of people to trade the symmetrical triangle, you know, whenever they want to trade the forex market. Then the next one I'm going to be talking about now is the cup and handle. Like I told you, it's just something. It's just like you know how a cup is. This is how a cup is, and then there's a handle, something like this. That's how the cup is. So that's just how the stuff is as well. You may then have something like this as the handle, and you have something like this. It breaks out, then begins to go the other way. That's just it. That's just the cup and handle. It's very, very rare to find, but believe me, these few ones I've talked about, whenever you see them, trade them. Apart from the double top, because apart from the double top and double bottom, it works, but I won't really advise much on that because there are lots of irregularities in the double top, especially in DERIV trading. Remember that what I'm talking about really is DERIV forex trading. That's the main thing our focus is on. So they are falling wedge, they are bullish flag, there's ascending triangle, there's ascending channel, and all of that. There are lots of them. So the trading price action patterns, they are very, very nice, and I advise a lot of people to trade it because it actually gives a lot of money. You know, especially when it doesn't is one of the easiest forms of price action. It's one of the easiest forms of price action because it doesn't need much skill. You just have to know how the pattern is, and once you find the pattern, you just draw it. There are lots of others. You can see them here on the screen. I didn't want to show them because I don't want us to waste a lot of time in this video, because the video is a very nice one, and I believe it's going to help increase people's means of trading and actually make them trade better in the forex in the industry. Forex eats people's money a lot of time, but it's actually very nice because it actually makes money for people. Like I keep saying, not everyone who trade forex make money, and not everyone who make money from forex are consistent in making the money. So what are the means of actually being consistent in it? That's price action. I've been using price action for 2 years now, and it's been very, very helpful. It's been working for me. Sometimes you may regret using it, but in the long run, you find out that, yeah, you make money from it. Sometimes you make losses, which is normal, but most of the times you make profits. And by the time you keep making losses, you learn more things about the price action, and you know, it becomes very, very nice that your losses begin to reduce, you know, in time. So talking about candlesticks. Now, why I want to refer to candlesticks is because a lot of people have asked me questions about candlesticks, and I'm sorry to say this because that's what I know that candlestick trading is one of the most popular PDF files that you find when you want to learn forex trading. That's the first thing, and it's very, very enormous. You think that you're studying maths or you're studying a very hard course, as if forex is hard. And candlestick formation, it's unfortunately, I'll say is one of the worst things you can ever teach somebody in forex market. It's one of the worst things. It does not work. I have never seen anybody. You know, when I'm talking about indicators, if you know me well, I do say that I know some people who use indicators and make money using indicators. But me, I've never seen one person using candlesticks and making money. That is the worst form of trading. That is the worst form. is the, I don't even know how to explain it. And then the irony of the whole matter is that that is the PDF file, or that is what is everywhere. I was so lucky that when I wanted to learn forex, I did not experience, you know, having the candlesticks or even having a PDF. One of my friends who had it then, I think he used it. He kept on blowing out. It was like, wow, is this thing not working? Like it's so enormous and it's so bad. It doesn't lead to any good thing. It's the worst thing you ever use trading the forex market. Never use candlesticks. Never. In fact, people find out with time that it's not good and they even stop using it. But of course, I know that the sole purpose of this video is to actually tell you the strategies that are nice, the ones that are good, the ones that are not nice. And believe me, I'm saying it with 100% affirmation that candlestick formation or candlestick patterns or candlestick whatever, and there are thousands and billions of them, it does not work. Stop it. If you have someone that is using it that is working for them, kudos. But I'm telling you what has worked for me, and believe me, it doesn't work. So that's that about candlesticks. So how to actually analyze the market. Now, there are lots of principles to analyzing the market. There are lots of strategies to analyzing the market. One of them includes that of the price patterns, which we've talked about. But apart from that, there are lots of things to analyze the market. I'm just going to tell you some of them, you know, because I don't want to make the video enormous. But one of the main principles is never analyze the market with just one time frame. Please don't do it. Don't do it. Never analyze the market with just one time frame. You don't just analyze the market in H4 and conclude that that's all that happens in H4. H4 takes a lot of time to come to pass. That's one thing you guys don't understand. H4 means one candlestick is formed in 4 hours. I know people who just analyze market using just H4 time frame, and they say, I'm going to make a lot of money in this thing. H4 is 4 hours. It takes 4 hours for one candlestick to form. So why are you going to use just 4 hours? Within that 4 hours, if you have maybe $1,000 accounts, or $500 or $200, before the market even goes your direction, the stuff has gone. Your account has blown. So whenever you're going to analyze the market, there are lots of stages which I've given to some of my mentorship students. I've told them that this is how, you know, the basic principles of analyzing markets and all those. But one of the ones I'd love to share out there for you freely that can improve your trading career, and I keep saying it, do not use one time frame to analyze the market. Once you're done with H4, go down to other time frames. There are smaller time frames that you can pick entry. Never pick an entry with H4 time frame. H4 time frame is a major resistance. There are minor resistances in the forex market. Minor resistances in the 5 minutes, minor resistances in the 15 minutes, in the 30 minutes, not H4. H4 is very, very nice to tell you, okay, yeah, this is the general way the market is meant to move. But then after, you come down to the lower time frames and find out the actual point where you want to pick the trade and trade. And then my strategy. The strategy I use is out there free of charge for my mentorship students. So I don't know. I use a lot of strategies actually to trade. One of them is this price pattern I just talked about, but it's very, very known, and I love their price pattern strategy is not just about seeing the price pattern. There are other things attached to it that, yeah, if you see the price pattern, you have to wait for confirmation, like that of the neckline. If there's no neckline, you shouldn't trade it because you're not sure if it's a price pattern. That of the double top, there's also something is out there for the mentorship students and all those. Good. But I believe the video was very, very helpful to you. Subscribe and turn on the notification bell so that whenever I post another one, you are going to be able to see it. Log on to www.derivefxgroup.com for more information. Thank you for watching.